Imagine this, it's the year 2027. You walk into a store, buy a coffee, and as you tap your phone to pay, the central bank instantly deducts not only the price of the coffee but also calculates and collects the sales tax in real time. No waiting for accounting reports, no manual tax filings, no cash in hand. Just a perfectly transparent digital transaction. This is not science fiction. It's the future with central bank digital currencies, CBDCs. Now, here's the big question. Are businesses ready for this transformation? Because CBDCs won't just change how we pay, they will reshape how companies manage accounting, how taxes are collected, and how governments monitor financial activity. In this video, we'll dive into how CBDCs could completely transform the way businesses operate. From instant payments to automated accounting and tax deductions you can't avoid, this is going to be the biggest financial shift in decades. Welcome back to the channel. Today we're exploring one of the most pressing questions of our time. How should businesses prepare for the arrival of CBDCs? Now you might be thinking, isn't this just like digital banking or cryptocurrency? Not quite. CBDCs are a whole new system, a government-backed, centralized digital currency that could replace cash and coexist with our bank deposits. For a freelancer, it could mean instant payments from international clients. For a cafe owner, it could mean zero transaction fees but instant tax deductions. For a multinational, it could mean seamless cross-border settlements but also constant financial surveillance. By the end of this video, you'll have a clear roadmap of what CBDCs mean for your business, and most importantly, how to prepare before it's too late. What exactly are CBDCs? Let's quickly break down CBDCs in simple terms. A CBDC is digital money issued directly by the central bank. It's not like Bitcoin or Ethereum because it's not decentralized. Instead, it's fully under government control. Think of it as digital cash, but programmable and traceable. Here's a story. Back in the 17th century, Sweden was one of the first countries to adopt paper money. Fast forward to today, Sweden is leading again, testing its e-krona, a CBDC. Why? Because cash usage has fallen below 10%. The same shift is happening globally. The Bahamas launched the sand-dollar, China is pushing ahead with the digital yuan, and countries like Nigeria, India, and the EU are deep into pilot projects. For businesses, this signals one thing. The global financial system is preparing for a massive upgrade. The payment revolution CBDCs will revolutionize business payments in several ways. 1. Instant settlement, no more waiting 3 to 5 business days for wire transfers. A payment made in CBDC arrives instantly. Example. A Pakistani freelancer working for a U.S. company could receive payment within seconds, bypassing PayPal, SWIFT, or costly intermediaries. 2. Lower transaction costs. Businesses today lose billions to card processing fees and bank charges. With CBDCs, those costs could shrink dramatically. Imagine a supermarket chain saving millions every year just by avoiding 2 to 3% credit card fees. 3. Programmable payments. Here's where it gets futuristic. CBDCs can be coded with conditions. For instance, a supply chain contract might release payment automatically once a delivery is scanned into the system. No invoicing delays, no disputes. 4. Borderless transactions. Today, sending money abroad involves exchange rates, fees, and delays. With CBDCs, cross-border trade could become as easy as sending an email. Picture this. A Pakistani textile exporter gets paid instantly in digital yuan or euros, without middlemen. Warning, but here's the twist. Every single transaction will be recorded, traceable, and monitored, which means convenience comes with a cost to privacy. Accounting in the CBDC world. Accounting is one of the biggest areas CBDCs will disrupt. Traditionally, accountants spend hours reconciling bank statements, invoices, and receipts. With CBDCs, Every transaction is recorded on a digital ledger in real time. This eliminates reconciliation errors. Financial reports could be generated instantly. Example: a small retail shop today might struggle with monthly bookkeeping. With CBDC-enabled accounting software, every sale, tax, and expense would be logged instantly into the system. But here's the challenge: creative accounting, hiding sales, delaying reports, manipulating numbers will become nearly impossible. Governments and auditors may have direct access to your ledger. So while efficiency increases, so does transparency and surveillance. Taxes. Goodbye, tax evasion? Now let's talk about taxes. This is where CBDCs become really powerful and controversial. Governments could program CBDCs to automatically deduct VAT, GST, or income tax at the point of transaction. That means no more tax filing headaches, but also no room for businesses to forget or underreport. Example: if you sell a product for 10,000 PKR and the tax is 15%, the CBDC system automatically deducts 1,500 PKR and transfers it to the tax authority in real time. This sounds great for compliance, but think about the implications. The informal cash economy disappears. Small businesses that rely on off-the-books transactions will be forced into full transparency. Tax audits may become instant and automatic. For governments, this is a dream. For businesses trying to avoid taxes, a nightmare. Risks and challenges. While CBDCs promise efficiency, there are real risks for businesses. Privacy. Every transaction is trackable. Businesses lose financial anonymity. Cybersecurity. CBDC wallets could become a prime target for hackers. Dependence on central banks. If the CBDC system goes down, businesses could be locked out of their own money. Transition costs. Upgrading POS systems, training staff, and integrating with new accounting tech won't be cheap. And here's another concern: programmable restrictions. What if governments set rules on how, when, or where you can spend CBDCs? For example, limiting subsidies, restricting purchases, or freezing accounts. This gives regulators enormous power, and businesses need to be aware of these possibilities. Preparing for the CBDC era. So, how can businesses prepare? Upgrade payment systems. Ensure your POS and e-commerce platforms can handle CBDC transactions. Invest in smart accounting software. AI plus CBDC integration will make accounting seamless. Get tax ready. Plan for real-time tax deductions. Build compliance into your cash flow. Train your team. Employees must understand CBDCs, digital wallets, and cybersecurity risks. Scenario planning. Imagine how programmable money might impact your industry and prepare contingency plans. Think of CBDCs like the internet in the 1990s. The businesses that adapted early became giants. Those who ignored it were left behind. By 2030, experts predict that most major economies will have adopted some form of CBDC. For businesses, this could mean faster global trade. No reliance on physical banks. Total government visibility into your finances. The big what if is, what happens to banks themselves? If CBDCs allow businesses to hold money directly with the central bank, will commercial banks still matter? Or will they be reduced to loan providers only? This is the trillion-dollar question, and businesses need to watch it closely. CBDCs will redefine the business landscape. Payments will be faster, cheaper, and borderless. Accounting will be real-time and automated. Taxes will be deducted instantly with no room for error. But this efficiency comes with trade-offs. Less privacy, higher surveillance, and new risks. The key takeaway is this: businesses that prepare today will not only survive the CBDC transition, they will thrive in it. Backhand index pointing right. If you found this video valuable, make sure to hit like, subscribe, and comment below. Do you think CBDCs will empower businesses or give governments too much control?